is it beginning to feel like maybe this isn't just a one-day sell-off, a one-day event?
Well, I don't think we know now, but clearly the market is adjusting to the fact that the global economy is growing quite quickly. And as a consequence of that, monetary authorities around the world are either starting to remove accommodation or are thinking about starting to remove accommodation. And that's a little different from the environment we were in the prior, 7 or 8 years. So bond yields have moved up, and as bond yields have moved up, that's put a little bit more pressure on the equity market, and I think the equity market has adjusted in response. Now, in terms of what it means from the central banker's perspective, this is all about, magnitude and duration. The little decline that we've had in the equity market today has virtually no implications for the economic outlook because it precedes a very, very large rise in the equity market over the last few years. So if it stops here, the implications for the economic outlook are very marginal, and so probably not going to change our thinking about the economic outlook. If it were to go on much further, and be much more persistent, then it could start to affect household and business spending behavior, and then that could actually start to influence the economic outlook. But so far, I'd say this is small potatoes.
But I also want to put on the table that as I was thinking about this and talking to you today, I was thinking about 2015. When we came into the year, oh, the Fed's going to hike rates in March, and then there was, Brexit, and then there was a big sell-off in the Chinese stock market. It hit U.S. stocks. Fed passes in the summer, passed on a rate hike again in September, only one rate hike that year. So clearly there's a point where markets and market volatility can have a very definite impact on the Fed's path.
I think it depends a little bit about why are the markets doing what they're doing. In the first quarter of 2016, it wasn't just about the markets. Commodity prices were falling very sharply. This is putting a lot of pressure on emerging market economies that were dependent on commodity exports. China was going through a pretty difficult adjustment. So it wasn't a market event per se. It was really things that were actually happening in the global economy. I think this is a little different. The global economy is doing fine.